Hello and welcome to myfinancesteacher.org. Let's talk about gold. Gold has been frustrating for a very long time. It was near $2,080 in early March over here, and it's now around $1,720 or so. With such a drop over quite a while, over more than 4 months, I expect many investors are probably throwing the towel and giving up on gold. After all, the decline down into this intermediate cycle low has been going on for perhaps 135 days, as we've probably seen the intermediate cycle low on the 21st of July. Actually, the previous relatively long decline into the intermediate cycle low was in the second half of 2020. And that pretty long decline lasted for only 115 days. So perhaps current pessimism in precious metals might actually be even worse than that in December of 2020, when gold price dropped by around 15.6%. From $2,090 in August down to about $1,780 in December. Actually, current pessimism reminds me of what happened in August 2018, when gold actually declined for a very long time, either for 127 days or maybe even for 203 days, depending on which of these two peaks of the double top you choose for your calculations of the duration of the decline. So even the shorter option here of 127 days is pretty long, quite similar to what we've experienced over the last few months. And looking at the 14-day RSI, it's also at the lowest levels all the way since August 2018. So I'm not sure it's a really good idea right now to sell at such oversold levels. Yes, holding gold has been painful lately, but patience will likely be rewarded into the new intermediate cycle rally, perhaps over the next few months. And actually looking at history again, after August 2018, the rally into the new intermediate cycle didn't actually make new highs. So if history rhymes over here, some say history doesn't repeat, but it does sure rhyme. If history rhymes over here, perhaps the new cycle rally might top out somewhere around the round number of $1,900, $1,900 on gold. Also coincides with some of the technicals, such as the high in mid last year and the low at the end of March this year as well. Somewhere around 1900 would also be pretty close to the 62% Fibonacci retracement. And as I've often mentioned in the videos, the most common retracement numbers are the 38, 50, and 62% retracements. Next, looking at Optimism index, there are more similarities. First, it was recently again at the lowest levels all the way since August 2018. And secondly, over the last few months, the Optimism index, has dropped by over 40 points, from above 70 to below 30. The last time it dropped by as much, again, was at that intermediate cycle decline down into the August 2018. All the way since then, we don't actually observe optics dropping that much. And if you zoom out for a longer history, you will see that usually intermediate cycle lows come with this Optimism index somewhere around 30. So again, perhaps a new cycle rally is likely over the next few months. And looking at seasonality, it actually also agrees with at least a bit of a relief rally, as it shows that gold usually drops down into July. That's actually true with seasonality going back 10 years, all the way back to 2012. And that's also true with the more recent seasonality going back to 2015. Again, we see that gold usually does drop down into July. So while personally I still hold my precious metals allocations, and while I still expect precious metals, gold, to recover perhaps over the next few months, unfortunately I can't see the future. I don't know who can. So If you can, tell me where do you see gold price, perhaps by the end of this year. So check your crystal balls and tell me down in the comments below, where is gold price around the end of this year. Have a nice day. Bye-bye.